What's up, everybody? This is Sungko, the Korean bro. Today is 2022, June 19, right? Okay, let's look at the articles about stock market. Okay. Hmm. Apple workers in Maryland become first to vote yes for a union. Credit Suisse reject $550 million claim linked to corrupt advisor. JP Morgan economist evoke God in chilling research notes. Inflationary grocery prices are hitting everyone hard. Why retiring this year could be a worst case scenario. Stock market forecast for next 6 months holds big risk for Dow Jones. Don't be duped by doomsayers, JP Morgan says. The S&P will rebound to 4,900. Treasury stocks it's using to bet on a bounce. Bonds haven't protected you from the bear market in stocks, but this one asset class could have. Should you buy Amazon, Walmart, Target, and Costco stock? The Dow edged higher, tech stocks rallied. And what else happened in the stock market today? Warren Buffett broke up with most of his beloved bench. Why is he still swooning over this one? Um, Warren Buffett's portfolio is full of buyback opportunities, which he calls the best use of cash. There are three companies with biggest. Two strong buy dividend stocks with 7% dividend yield. Is it time to sell action stock after the White House taken aim at a big oil? As tech gets hammered, the stock looks attractive even in a recession. Bitcoin's nosedive drew the $20,000 mark is a Minsky moment for crypto. Hmm. AP photos despite dark times, Russian economic forum shines. Hmm. Okay, CDC recommends COVID-19 vaccines for children under 5. Biden mulling tariff decision will talk soon to China's Xi. What comes after 5G? Here's what your business should be exploring now. Big crowds hit London streets to protest Warren Coast. Ride out the recession with these three dividend kings. What to make of Tesla right now? Procter & Gamble stock continues to be resilient despite turmoil. eBay's long-term fundamentals are intact if you can stomach short-term volatility. Citigroup stock is the cheapest of the big banks. It's ready to take off. Saudi Arabian stocks tumble as oil rates maul Mideast equities. A crypto bankruptcy could be investors' nightmare. Why stock market investors nervous that an earnings recession may be looming? Thinking about bargain hunting stocks, here's why you may want to hold off. The vandalism of 5G infrastructure objects, the economic slowdown, if not recession, related to the COVID-19 pandemic. These are just some of the factors that were stagnating the global implementation of 5G, but it looks like the process is finally accelerating now in 2022. More importantly, commercial 5G networks have been already deployed in over 60 countries worldwide. The industry is already buzzing about the yet to adopt new connectivity tech like 5G advanced and 6G, also how they will be driving for the digital transformation. Network slicing, edge computing, and other culprits of 5G advanced will inevitably have a huge impact on the digital advertising ecosystem. For what it takes, the seamless URLRC communications will soon make the Ultra HD video streaming in real time an absolute new norm. It will also certainly expand available WebXR and opportunities as well. The wider deployment of 5G advanced across urban areas will also fuel the release of much bigger multitude of smart devices, those beyond the conventional 5G enabled smartphone models, whose install base is forecast to surpass 3 billion by 2027. This will consequently extend the immersive advertising market niche, making it more competitive, specifically in the shoppable XR vertical. New horizons to explore with 6G. Seven commodity ETFs to help build a hedge against inflation. Mm. Big crowds take London streets to protest soaring cost. It's not only in London, but also in Korea. A lot of people are suffering from a huge uh inflation, not huge inflation, but like upward inflation. Thousands of people marched through central London on Saturday in a protest over the soaring cost of living in Britain. Huge crowds flooded into the British capital for the rally to demand that the government do more to help people faced with bills and other expenses that are rising more quickly than their wages. Uh, Prime Minister Boris Johnson has been criticized for being slow to respond to the cost of living crisis. Inflation in Britain and across Europe has been surging as Russia's war in Ukraine crimped supplies of energy and food staples like wheat. Prices were already rising before the war, as the global economy recovery from the COVID-19 pandemic resulted in strong consumer demand. Hmm. Demonstrators carried banners with messages such as "Cut war, not welfare." They booed when they passed by 10 Downing Street, the Prime Minister's residence, according to videos posted on social media. Ben Robinson, who works for a housing charity in South London Brixton neighborhood, said the government doesn't realize how bad things are going to be for the poor. Hmm. Okay. Um. Okay, something is going on in London as well as Korea. But the only difference is that I didn't see any protest in Korea. Mm. But in London, people are uh having hard protest. Uh, okay, and next one we have is hmm, route out the recession with these three dividend with these three with these dividend kings. Dividend kings are proven payers for tough times. Recession or not, dividend kings have proven track record of success, includes over 50 years of consecutive distribution increases. This tells us management has the foresight to run their companies profitably in both good times and bad. The stocks on our list today are not only dividend kings but also consumer staples. The sector we most want to be in during an economic downturn. While we can't predict with 100% certainty what will happen with the economy, inflation, and interest rates, we can predict that these companies will continue to pay their dividend and even raise them while the rest of the stock market is floundering. Colgate Palmolive yields. As a dividend king with 60 years of consecutive dividend increases under its belt, as of the last increase, the stock is paying about 2.55% in yield while trading about 24 times its earnings. Hormel Foods, lower yield but stronger growth. Procter& and Gamble, the high yield value among dividend kings. Procter& and Gamble, resilient despite turmoil. P&G's products are not very price sensitive. The stock is less volatile than the broader market. Hmm. The long-term economies of the company remain intact, making it an attractive stock. Procter& and Gamble is an American multinational consumer goods company known for brands such as Pampers, Tide, Bounty, and Gillette. Consumer staple companies tend to hold up better during inflationary times. You know, consumer staple companies, okay? As they provide products that are often necessary for everyday use. Therefore, having defensive stocks in your portfolio during times of inflation can help mitigate some of the side effects of rising prices and market volatility. Hmm. Having defensive stocks in your portfolio during times of inflation can help mitigate some of the side effects of rising prices and making volatility. Financial outlook. Factors to consider before investing in PNG. PNG is potentially overvalued since investors are willing to pay a premium for a business that can manage economic and market volatility better than its peers. PNG being a blue chip stock is one that is preferable to hold it over a long period. Hmm. Being a blue chip stock is one that is preferable to hold it over a long period. Hmm. Um, where it will continue to provide reasonable returns. It also has a dividend of around 3%, which is attractive. The stock remains attractive for those who wish to keep their portfolio defensive and are not focused on returns. You know, Apple workers in Maryland becomes first to vote yes for union. Apple Store workers in Maryland on Saturday became the first group of employees in the retail giant's 46-year history to win the right to union representation. The Union victory was 65 in favor of a union and 33 opposing one come as workers across tech and retail sectors ramp up petitions for labor representation. The victories threaten decades-old business models that have allowed many large corporations in the U.S. to operate without concerns over collective bargaining. Hmm. Ballots from Apple's Towson Town Center held on Saturday evening at the end of a 4-day vote resulted in a vote overwhelmingly in favor of joining the International Association of Machinists and Aerospace Workers, according to a union representative. Hmm. There's a revolution coming. The victory follows other high profile wins for unions working for being named retailers. The victory follows other high profile wins for unions working for being named retailers. In April, Amazon warehouse employees in Staten Island, New York became that company's first group of U.S. workers to win a union election. Amazon is challenging the election results. And since December, the Starbucks barista from more than 150 U.S. stores represented by Starbucks Workers United have successfully unionized the retail locations. Inflation, grocery prices are hitting everyone hard, and shoppers aren't happy. Yes. The rising cost of food has forced Rick Romero to change his shopping habits. Between the cost of food, the cost of fuel, it's hitting everyone hard, and we're not getting any compensation at work to try to balance it out. The LA resident told Yahoo Finance. I buy the same items pretty much every week, and it's gone up $70 or so. Well, I buy the same items pretty much every week, and it's gone up $70 or so a week now. His experience is being shared by shoppers across the country who are facing sticker shock on almost all types of groceries. According to the Labor Department's U.S. Consumer Price Index report, the index for eggs increased 10.3% in April alone. Mm. We have to rebalance our budget, Lamoro added. We have to constantly redo a budget every time. It's not like before where you set a budget and you are good. You have to work it now. It's not like before where you set a budget and you're good. You have to rework it now. Hmm. The food inflation is a clear trend amid the overall rise in prices. The food at home indexes rose 10.8% over the last 12 months, the largest 12-month increase since the period ending November 1980. The Labor Department's April Consumer Price Index report stated the index for meats, poultry, fish, and eggs increased 14.3% over the last year, the largest 12-month increase since the period ending May 1979. The main numbers weren't much better. Costs for food jumped 10.1% from a year earlier, while food in the at home category rose 11.9%, the highest increase since April 1979. All six food at home categories also increased year over year basis. Hmm. Why return this year could be a worst case scenario. This year's plot. This is an urgent update for anyone who has recently retired or who was hoping to retire shortly and who was expecting to follow one of those simple time tested rules for spending down their money during their golden years. Watch out and, if possible, err on the side of caution, tighten your belt, and spend a little less than planned for the next couple of years. Hmm. Don't be duped by doomsayers, JP Morgan says. Looking at the S&P 500 now, you might be convinced the stock market is destined for doom in 2022. The benchmark index rose nearly 27% last year. It's already down 22%. Plenty of stocks are deep into correction territory. JP Morgan's global head of equity macro research, Dubravko Laku, sees a major rebound on the horizon. Hmm. People are basically positioned for a recession. Our base case is that this is not going to be a recession in the next 12 months. Uh, Lakush told CNBC earlier this month, and we think from that angle the portfolios are wrong footed. Lakush reiterated a year-end price target of 4,900 for the S&P 500. Since the index sits at 3,736 today, his target implies a potential upside of around 31%. If you are aligned with Lakush and are looking ahead to a potential reversal, here's three stocks JP Morgan finds particularly attractive right now. Bill Gates says crypto and NFTs are a fool's game. Here's the surprising thing he buys instead. Mitt Romney says a billionaire tax will trigger demand for smart shit SMAR. Mm-mm. This work management platform helps companies implement, organize, and automate their process. Smart Sheet says its application used by more than 80% of Fortune 500 companies. And business is growing. The fiscal quarter ended. SMER. What is SMER? Okay, it's already on my watch list. Work management platform helps companies implement, organize, and automate their process. Smartsheet says its application is used by more than 80% of Fortune 500 companies. Hmm. Smartsheet's dollar-based net retention rate was a solid 133%. Notably, Smartsheet's dollar-based net retention rate was a solid 113%. But the stock is far from being a hot commodity. Year to date, shares are down a painful 61%. That could give contrarian investors something to think about. Last week, JP Morgan analyst Pinjarm Bora reiterated an overweight rating on Smartsheet, while Bora also lowered his price target from $80 to $58. The new target is still 96% above where the stock sits today. Microsoft, and next one is LLY. This American pharmaceutical giant commands more than $270 billion in market cap. Okay, next one. Should you buy Amazon, Walmart, Target, and Costco stock? Retail stocks have seen huge price drops because pretty much every retailer has issued a cautious guidance due to supply chain issues and increased cost. Retailers including Walmart, Target, Amazon, and Costco have all seen their share prices fall. Target shares, for example, are down almost 40% year to date, with most of the drop happening after the company reported its first quarter earnings. CEO Brian Corner commented on how his company performed in the press release. Gas continue to depend on for our broad and affordable product assortment, as reflected in quarter first gas traffic growth of nearly 4%. Throughout the quarter, we faced unexpectedly high costs, driven by a number of factors, resulting in a profitability that came in well below our expectations and well below where we expect to operate over time. Target's forecast similar to its rivals. Warren Buffett's portfolio is full of buyback opportunities, which he calls the best use of cash. Here are three companies with the biggest hidden dividend potential. The magic of buybacks. Portfolio is full of buyback opportunities, which he calls the best use of cash. Here are three companies with the biggest hidden dividend potential. The fact that the world's most famous investor, Warren Buffett, appreciates shareholder rewards shouldn't be surprising. After all, sizable and predictable return is the whole point of investing. Buffett takes this philosophy seriously and seeks out companies with the most generous shareholder rewards program. All five of his biggest holdings pay dividends, but they also have some else in common: buybacks, stock buybacks, or share repurchases could be considered hidden dividends. Here's why Buffett's portfolio is dominated by companies buying back their own shares, and why the Oracle of Omaha regularly buys back Berkshire Hathaway shares too. What is buyback? The measure of buybacks. Union Pacific, Apple, ExxonMobil. Hmm. In 2004, Buffett described his thesis on buybacks: when stock can be bought below business value, probably the best use of cash. He told Berkshire Hathaway investors, a buyback program reduces the number of outstanding shares. Mm. That makes each remaining share more valuable. It also means that the company's annual earnings belong to a similar group of investors. Mm. Buybacks have the other advantage: they're more tax efficient than dividends because shareholders receive some value without the need to receive cash. These buyback programs are also a sign of confidence from the company's management team. As tech gets hammered, this stock looks to attract even in recession. Oracle. Amid a devilish brew of rising rates, brew of rising rates, high inflation, and recession fears, the tech sector offers few hiding places for investors. The market is shunning the high growth, profitable software stocks that drove the sector higher during the pandemic. Consumer-facing e-commerce and hardware stocks are sagging, plagued by weakening demand. Social media plays are taking a beating as ad buyers retrench, and supply chain issues are hitting chip stocks. Almost every tech stock is down for the year, with dozens of more than 50%. In past columns, I've made the case for betting on cloud computing, and I think the story remains compelling. As recent earnings reports from Amazon.com, Microsoft, and Alphabet made clear demand for cloud-based computing services is both vast and expanding. Hmm, okay. Not just software that's eating the word cloud computing. Winslow argues that Wall Street is underestimating the growth potential for Microsoft Azure. I see Microsoft and Amazon as the best long-term bets on the cloud, but also see opportunity in another cloud play that's still holding in plain sight. In February 2021, I wrote a bullish cover story about Oracle, making the case that the enterprise database and applications company had quietly involved into an underappreciated cloud story. The company was driving its customers to adopt cloud-based versions of its software, while also launching Oracle Cloud, a flashing rival to the public cloud's big three. Oracle's transition to the cloud was gaining traction, but investors hadn't caught on. As it turned out, Oracle was a great stock to own in 2021, rallying more than 70% by mid-December as quarterly results showed steady progress on the cloud strategy. Now let's go over to Oracle. What do we have? Oracle Corporation. Okay. Hmm. He keeps mentioning Oracle, and the service they provide is should be appreciated even more than what it is now. Because he really thinks it's really underestimated. Since it's underestimated, people have to look for its chance instead of just looking at other big companies. You know, a crypto bankruptcy cloud be investors' nightmare. Indeed, myself, crypto bankruptcy could be investors' nightmare. The cryptocurrency market's latest swoon is giving investors a painful lesson about the risk of trading digital tokens through intermediaries. Sliding digital asset values pushed lending services Sensios Network LLC this week. Oh, hi. Hi. Okay. A crypto bankruptcy could be investors' nightmare. Indeed. Uh, I'll right after this is finished. I'll call you soon. Thinking about bargain hunting stuff, here's why you may want to hold off. Yes. Chang. 음, 창. Before I sleep. 잠자기 전에. 창. I gotta call my girlfriend. I gotta call my girlfriend first and then call you next. 어. 통화 10분? No, I cannot guarantee. 10 minutes. No. But Chang, for real. Before I sleep. Okay. Thinking about bargain hunting stocks, here's why you may want to hold off. A 20% plus decline in the stock market often is a signal to bargain hunters to step in. Yes. But strategists caution the U.S. stocks could be in for further losses, and investors may want to remain patient. Yeah, 창. 음. All we have seen so far in the drawdown is mean reversion in the multiple. We haven't seen the earnings recession take hold yet, says David Rosenberg, economist and president of Rosenberg Research and Associate. We could go down under 20% to 30%. Okay, good. I'll call you right after I call my girlfriend. Guarantee. 창. Okay. Here we have an interesting article. Should Adobe investors feel warm and fuzzy after its earnings? Hmm. Metaverse competition user slow downward factors. Charge point is a buy, but Blink has challenges, analyst says. These are the five best EV stocks to buy and watch now. The stock market had a very bad week. Why it gets worse before it gets better. Rising rates, big losses, but so far little sign of panic in the markets. Ah, money. Hey. Oh, my girlfriend came. The days of big pharma are over. What the era of big biotech means for investors. Today, it's been so long, right? So since I did YouTube last time, and it's been a couple of days, and now I'm like so excited to go through every article that I'm interested in. And like I found really interesting articles. Some says mm, company named Procter and Gamble um that produces consumer staple product. Um, that is the one that we have to hold on to when we have uh, big inflation period. Uh, it was an interesting article because it was some kind of perspective that I had never gotten before. Hmm. Okay. And now we have more interesting articles ahead, and let's see. Small cap stocks have gotten crushed. Their rebound could be swift. Retail traders who drove meme frenzy bail out in the bear market. Bitcoin is crashing where it might be headed next. Hmm. How is that for a lesson? Wall Street reviews rocky 6 months. Simply Good Foods nearby zone quarterly report due. One's hot stock offering a market buckles under recession risk. Bitcoin's like digital gold. It's the version it doesn't have an unlimited supply. Buying AMD and Nvidia in the bear market. What to know now? What the Fed's base rate hike in decades means for the bear market in bonds. Three steps you can take to fight soaring gas prices. Morning brief. Buy the deep in LW stock after the earnings report. Check the chat. Hmm. Wells Fargo comments like in crypto collapse with dot-com burst. Alibaba stocks rises on report and group could be given permission to set up bank holding company. Insiders pull the trigger on these two controversial stocks. What do they know that we don't? Meta and Alphabet could take a hit on ad sales if economies falls into recession. How we capture profits in very low stock before energy sputtered. Okay, should Adobe investors feel warm and fuzzy after earnings? Okay, good quarter, light guidance. I've done well trading the stock in the past, but something is annoying me. For its first, second quarter, Adobe posted adjusted earnings of $3.35 per share. Oh. On revenue of $4.39 billion. Both top line and bottom line performance beat Wall Street expectations, while the sales number was good enough for annual growth of 14%, a new company second quarter record. The above mentioned adjustments were made primarily for stock based and deferred compensation expenses and amortization of intangibles. Hmm. For the fiscal third quarter, we are winning in our established businesses and seeing significant momentum in new categories from content authority for broader base of creators to PDF functionality on your web to the leading real-time customer data platform for global enterprises. From the conference call, Nuran added realistically, enterprise CEOs right now all recognize it's an uncertain time, and that's the conversation that we have. But despite that uncertain macroeconomic environment, the thing that all of the recognize is that digital is a priority. ChargePoint is a buy, but Blink has challenged analysts at ChargePoint. Let's look at ChargePoint. ChargePoint Holdings business model gives B. Riley securities analyst confidence in the company. But he's less upbeat about the challenges facing competitor Blink charging. Mm. Christopher Souther initiated coverage of electric vehicle charging equipment maker ChargePoint at a buy with a $20 price target on Thursday, and cited in a research note the company's dominant market share, first mover advantage in public charging and growth strategies to expand its fleet and residential home charging. The stock market had a very bad week. Why it gets worse before it gets better? After After 3 year hiatus, the Golden State Warriors are the best team in basketball again, and they had to navigate an injury-driven tumble from the top to the absolute bottom to do it. There's lesson in there about bear markets, recessions, and all the fears gripping investors right now. After the stock market tumbled this past week, investors probably feel like Warrior star Stephen Curry in 2020, asking what else could possibly go wrong. The S&P 500 dropped 5.8%. It's the worst weekly decline since March 2020. Rising rates be losses, but so far little sign of panic in the markets. Gauges of share price volatility have been relatively subdued despite the sell-off. At the opening bell on Thursday, an unusually large wave of selling hit the New York Stock Exchange with thousands of stocks sliding in tandem. The market was already nursing trillions of dollars in losses, and yet few on Wall Street panicked. Despite some of the volatility in the moves, it is actually very calm, said Todd Sanders, the co-head of Barclays Equity Sales and Trading Business. You can feel it walking across the trading floor. It's quiet. Even as the S&P 500 entered the bear market territory, and more than 3,500 US stocks fell to a new 52-week lows this past week, gauges of volatility have not signaled the kinds of market distress registered during violent past episodes, such as the start of the coronavirus pandemic in March 2020. Hmm. Elon Musk said he's buying the crypto dip. The billionaire and CEO of Tesla is an evangelist of digital currencies like Dogecoin and Bitcoin. This is undoubtedly the wake up call the cryptocurrency market needed. Now, will this be enough to stabilize prices? The next few hours will tell, but there are still many questions, especially about the solvency of many crypto projects and firms. Elon Musk, the CEO of Tesla and one of the biggest influencers in the world, gave his support on June 19 to the crypto industry and more particular to the meme coin, meme coin Dogecoin. I would just keep supporting Dogecoin. Musk tweeted to his nearly 99 million followers in June 19. They followed on an exchange with a user who told Musk that he should therefore continue to buy Dogecoin if he really supported the token. To which Musk responded, I am, suggesting that he's buying the deep. Prices are rebounding. Most tweets cause a real rebound in the market, which saw the post of the richest man in the world as a sign of renewed confidence in cryptocurrencies. While there are many questions about the future of many projects and firms, Bitcoin's crashing. Where it might be headed next? The Bitcoin carnage continues as the cryptocurrency breaks $20,000 trade at its lowest level since 2020. Uh, Wall Street reviews rocky 6 months. In early January, the outlook for the next 12 months looked pretty rosy to Wall Street, with some predicting that the S&P 500 index will reach 5,500 by year's end. But 2022 had other plans. Wall Street reviews rocky 6 months. The Federal Reserve began showing greater urgency in dealing with inflation. Russia invaded Ukraine, which sent oil and grain prices skyward. Mega cap tech shares crumpled as earnings began to disappoint, and growing fears of recession weighed heavily on stocks and bonds. Longtime bears began to see nothing but bad news, and the two-year bull market finally ended June 13. The pain has continued, with the S&P 500 closing on Friday at 3,674, down 23% on the year. Humbled prognosticators, shaken advisors, and stressed money managers alike are now weighing the lessons learned as they brace for the second half of the year. Here's what they're saying. Sean Cruz, head trading strategy at TD Ameritrade, expected inflation to moderate significantly. There were quite a few market watchers who probably had the same thing. When Russia invaded Ukraine, they thought it was just going to be the Donbas region, chip away like they did with Crimea. Everyone thought that was going to be the case. Like, all right, we're going to throw some sanctions on you, be thrown on your side, then all out and complete across the board sanctions. You know, buying AMD and Nvidia in the bear market. What's it now? I'm a firm believer in buying quality business when they go on sale. While emotions run higher during bear market and stock market corrections, that's often the best time for long-term investors to start shopping. If you are an experienced trader or a market speculator, they may be best to trade with the trend. At this moment, the trend is lower, If traders don't like shorting, they may very well wait for better trading conditions by waiting for a new uptrend. Three steps she can take to fight soaring gas prices. Morning brief. How we got here. Oil prices rise amid Russia-Ukraine war. Our problem, three solutions. So, what's an American to do? Well, the first suggestion is to drive less. Uh, well, the first suggestion is drive less, yo. I mean it. We're a bit entitled in the U.S., aren't we? Our gas prices are low relative to many countries. In Hong Kong, gas costs $11 a gallon, $10 per gallon, and the rest of Europe pays 7 to 8. Number two buys an EV. The math here changes. The price of gas goes from $2 to $5. Tesla recently raised prices, which could signal higher demand and pricing power, or supply chain issues and higher input cost. Ford's is selling briskly, so be prepared to pay more than the sticker price at your local Ford dealer. And of course, EVs aren't a panacea. We have to remember it's not low income households that are buying electric vehicles, says Kenneth Medlow, an energy expert and professor at Rice University. They're not at that price point yet, so it's not really a one except for upper middle and upper income households. Point three, buy action stock. And by that, I really mean the various energy investments, including all other oil stocks or ETFs, Chevron, Exxon, even including the Swiss 14% slide shares of Exxon are up 40% this year. The S&P 500 in contrast down over 20%. Becoming less reliant on gasoline is an inevitable imperative for America. It's amazing how tenuous their relationship is, by the way. In only a matter of weeks or even days, the system can become stressed. I'm old enough to remember the gas launch and rationing of the 1970s, which got ugly fast. So, to what gas shortages here in New York in October 2012. Hmm, three options. So, driverless, buy Axomobile stock, and what else do we have? Hmm. Buy an EV. Buy an EV in the long term. It's gonna help you save cost, right? Okay, this is it for today, and I'll see you guys tomorrow. Okay, bye bye.